Welcome to the Fear and Greed Business News afternoon report for Friday, the 24th of November, 2023. I'm Michael Thompson. Every afternoon, we've got the 5 stories that happened today that you need to know about. So let's get cracking. Story number 1, the S&P ASX 200 closed up 0.2% today to 7,041 points. It's really a bit of a mixed bag end to the week, I suppose. Information technology was the worst performing sector, followed by consumer discretionary, which I suppose if you think about it, doesn't bode too well on Black Friday. Consumer staples were up though. WiseTech Global and Technology One slumped. The best performers were utilities and energy, with Origin Energy among the top returning stocks over the day. More on energy and the latest developments in its takeover saga in a little bit. Almond growers Select Harvests has reported a difficult fiscal 2023 with $115 million in net losses. Its share price fell 10.5% today on the update, but it is optimistic for 2024. The business is expecting lower fertilizer and chemical costs to help offset higher costs from having to buy more expensive water during El Nino. Growing conditions are expected to be a little bit more favourable, driving a 20% lift in almond processing. So there you go. There's your nut update for the day. Wall Street was closed for Thanksgiving, but it has been a big day for commodities. A crucial OPEC alliance had to delay its meeting as an argument over output quotas continues. Meanwhile, iron ore prices have been under pressure due to Beijing increasing its monitoring on the spot and futures markets to crack down on speculation activity. On to story number 2, the nation's biggest superannuation fund, AustralianSuper, has lashed Brookfield's last-minute alternative proposal for Origin Energy as a lowball and a way to buy extra time for the deal. AustralianSuper owns a 17% stake in Origin and is intending to reject the alternative offer from Brookfield EIG. Now, we've spoken about this a lot during the week. The vote was delayed this week until early December, and the Australian Financial Review is reporting that Brookfield pressured Origin's board to delay the vote to consider the proposal, which gave it more time to lobby major shareholders. The Financial Review is also reporting that shareholder Perpetual also thinks the existing proposal price is too low. Origin's share price was up 2.8% today. Story number 3, the Productivity Commission has recommended the federal government ensure families can access affordable childcare for their children for 3 days a week, with the lowest earning, under $80,000 a year, able to get a 100% subsidy for these days, but in other words, free childcare. The new draft report has found the Universal Childcare Plan from the Albanese government could boost workforce participation by nearly 21,000 people. The majority of this would be mothers returning to work or increasing their hours. Now, the cost attached to each job would be $120,000 to the fiscal bottom line, but there would also be improved outcomes for children and an economic boost, according to the report, which also found that vulnerable kids would most benefit from additional childcare services and subsidies. Story number 4, leading employer groups are warning that employees who work from home might be the ones who get cut first when a business undertakes redundancies. The Financial Review is reporting that big business organisations like Australian Industry Group CEO Ines Willox think that employees who work remotely will be first in the firing line as they're seen as less of a team player and less collaborative. The Australian Chamber of Commerce and Industry is also saying it's a factor that employers will consider as the labour market weakens. AI Group has been getting more redundancy-related calls from members in line with recent surveys from HR researchers suggesting that up to a third of employers could cut their headcount in the coming 3 months. Finally, story number 5, 1 in 3 young women have just fair or poor financial literacy, despite 3/4 of Australians overall ranking themselves as having a good or excellent handle on their money. This is according to a new NAB survey, which has found a distinct gap in financial literacy between different segments of society. Not only are women falling behind, but young people aged 18 to 29 also report lower financial understanding. This coincides with the survey's finding that more than half of the younger cohort are in financial hardship at the moment. That's pretty confronting. There's been a general rise in hardship over the last 6 consecutive quarters in this NAB research, with the increased cost of living and rising interest rates compounded by financial illiteracy rates. Interestingly, men aged 50 to 64 and women over 65 actually reported the highest financial literacy. That's it for the afternoon report for Friday, the 24th of November, 2023. We'll be back tomorrow morning with the weekend edition of Fear and Greed Business News. I hope you can join us. I'm Michael Thompson. Enjoy your evening.